Good day, everyone. I'm Michael Chang, Chief Investment Officer Fixed Income at RHB Asset Management. Thank you once again for listening to this podcast. Continuing from last month in June, where I talked about the resurgence of COVID that hit Asia, we are seeing sharp increases of infections again this month, arising from the infection rates led by the Delta variant that continue to hit many neighboring economies this round. On 19 July, Indonesia reported more than 34,000 of new cases, with staggering daily deaths above 1,300, the highest daily death toll since the outbreak began. Malaysia reported 10,972 new cases. Thailand reported another record high of 11,784 new cases. Philippines reported 5,651 new cases, and that the Philippine government may reimpose tighter restrictions if the Delta variant continues to spread in the country. Meanwhile, for Singapore, it reported 163 new locally transmitted COVID cases as of noon on July 19, with 116 infections linked to the Jurong Fishery Port cluster and 20 cases with links to the KTV cluster. In summary, this increase in infections continued to hit headlines across the region and translated cautious sentiment towards growth. As mentioned previously, for Asia to contain this COVID resurgence, the only way is to ramp up vaccination rates by the respective countries. We have seen this data quite successfully in the advanced economies such as the US, the UK, and in Europe. When I was speaking on vaccination a month ago on 15 June 2021, Malaysia's vaccination daily doses were only 215,000. This month, for the week ending 18 July 2021, Malaysia continued to ramp up its pace of vaccination, administering a record high of 460,000 doses. I would not be totally surprised if the vaccination rate goes above 500,000 a day to stem infections posed by the new variant and to reopen the economy fully sooner. Not only that, the Malaysian government is also introducing an Operation Surge Capacity, targeting every adult in Klang Valley to receive at least the first dose by 1st August. Walk-in vaccinations have started for senior citizens above 60 years of age at selected vaccination centers. Tracking this progress, Malaysia's first dose vaccination coverage has risen to above 30.1%, catching up with Japan's 32.5%, about to overtake South Korea of 31%, and well ahead of India's 23.5%, Indonesia 15.7%, Philippines 9%, and Thailand 15.5%, although behind countries that are categorized as fast track, which the lights are Singapore 72.5%, UK 69.3%, US 56%, and China 51.7%, where China is based on 2 doses. In this chart, you can actually see that the vaccination rate in Asia is turning upwards compared to the other geographical regions such as North America, South America, Europe, etc., where daily vaccination is trending lower. Far more perplexing is Africa, where vaccination is unsettling low, where only 1% of Africans have been fully vaccinated. Taking a deeper dive and looking at vaccine supplies, the major vaccine names are about to manufacture close to 10.9 billion of doses by the end of this year, of which 9.9 billion are already sold, leaving another 950 million doses that are still available to buy. US and Europe by origin contributes more than 50% of the global supply of vaccines, followed by China, then Russia, and India. Back in May, total vaccines produced was 1.73 billion doses. Affinity, a science information and analytics company, forecasts that we see a total of 11.144 billion doses being produced by the end of this year, including other vaccines in the early stages of clinical trials. That said, there are still some real risks to vaccine supplies, comprising of shortages in certain COVID-19 vaccine ingredients and medical items needed to distribute vaccines. Secondly, vaccine holding. And thirdly, risks created by policies that disrupt international supply chains. In summary, the pandemic will continue to pose downside risks to global growth, arising from a more extensive resurgence of pandemic cases resulting from new variants. Although we are seeing nascent signs of growth, be it in industrial production or exports, where were said to recover faster than post-global financial crisis. Achieving herd immunity against the Delta variant could require as much as 90% of the population to be vaccinated or to have gained antibodies via earlier infection. While China and Europe are on track to approach such levels by September or October, the recent slowdown in the US vaccination pace suggests that the 90% level may not be reached until February 2022. Even in countries that made good progress earlier on, complacency could lead to slowing vaccine take-up as economies reopen. That said, as long as a large majority of people are vaccinated, containment measures to halt further pandemic waves are likely to be much less restrictive than during the past 18 months. Yields continue to head lower in the US and Malaysia on global growth concern. A month ago, spread between 10-year US Treasury and 10-year Malaysian Government Securities (MGS) was just 180 basis points, where 10-year US Treasury was 1.5%. Now, US Treasury is hovering around 1.2%, a further dive of 30 basis points than a month ago, largely due to safe haven flows on the back of concerns that there would be speed bumps to global growth caused by the lingering pandemic. Hence, spread has now widened to hover at 200 basis points. On the other hand, for Malaysia, 10-year MGS yield retraced only about 15 basis points, which also means the yield carry clearly favors Malaysia at the moment. That said, what could have kept yields elevated is the primary concern of larger supply of MGS and deficit to pump prime the economy. In conclusion, we expect to see further support for fixed income for the second half of 2021 on account of lower GDP expectations for whole of 2021, be it globally or Malaysia. The build-out of domestic onshore liquidity attributed by the gradual climb in domestic savings would continue to support bond buying activities further. We hope this podcast has been useful to you, and we would like to thank you for listening.